And you are listening to the Business Show on 89.1. Joining me in the studio today is Lawrence Atkinson from Truman's, and now we'd like to welcome to the show Rob Lees from Mortgage Choice.
Good afternoon.
Hello. How you going?
Good, very good, thank you.
We've been talking about social media, and you just shared something in the song break. Then, do you want to share it? I think it was cool.
I think it's amazing because I'm 56, and so it's been a long time since I've caught up with a lot of people I went to school with and I grew up with, and it's just been in recent days because of the connections through Facebook. I've been able to do a bit of business for friends that I haven't seen for over 30 years.
Oh, it's amazing.
And I caught up with a guy just last week, and I'm looking at doing 2 loans and providing financial advice to our financial planner. He lives down Campbelltown Way now, and another friend, again, 30 years, and I'm doing loans for his kids.
It's awesome.
And there's a bunch of them. There's a whole lot of them.
There's
like
the
that.
power of it. Like, you've harnessed
Absolutely.
it right there, because there's two things. One, that you would never, without social media, probably even have seen those people again.
That's right.
Is the first thing. The second thing is what that does is opens up a whole new lead generation area for you, doesn't it, in Campbelltown, of all those people that they might speak to, or they may see your interaction on Facebook or whatever it might be, which is great.
Yeah, it's amazing, really. I find absolutely amazing, and it's wonderful to have those connections. And actually, there's another one from the same group, and he had a work colleague that he wanted to refer to me.
Right.
And he's just moved back from London to Australia.
I was
This
going
is
to say
all
that.
Facebook.
Yes,
Yeah.
the colleagues that I have in the UK from my time over there, if there's anybody coming out to Australia that need an accountant to help set them up in business or whatever, then they refer to somebody that you know.
It's clearly a powerful medium, and I think we just need to work out how we can best make it work in our business. And, whether that be concentrated, deliberate planning and interaction, or just being who you are and letting things unfold, but just not ignoring the signs and the opportunities that come your way, I think.
Yeah, and I think that's at the personal level, because you've got the personal Facebook page as well as the business Facebook page as well. Yeah. And both of them need to be maintained.
Very powerful. Well, I want to say thank you, Lawrence, for chatting with us today
My
about
pleasure.
this topic.
Thank
It's
you.
wonderful. It's always lovely to see you.
Thank you,
And
Anthony.
see you in another 4 weeks, is that
Yes,
about right?
yes, indeed.
In monthly?
Thank you.
Fantastic. Now, Rob, we're talking today to you. Let's move on to Mortgage Choice today. So with recent increases to home prices, it's becoming increasingly difficult for first home buyers to qualify for a home loan. Is this what you're seeing out there?
Yeah, it is a lot more difficult, probably more so in the city, but local people are also finding it more difficult because house prices have gone up quite significantly in the last couple of years.
Yeah. So what are the requirements to qualify for your first home loan? What do people need to know?
Yeah, there's 3 basic requirements for every loan, and certainly for first home buyers. So first, you need income.
Yep.
Second, you
That'll
need
help.
Yeah, you've got to prove you can service the loan.
Yep.
But there's different ways the lenders look at income. Then you need cash or equity, and then you need to be of good character.
Yep.
Okay.
Oh, wow,
So-
that comes into it too.
Yeah, and I'll explain that. I mean, first, income. You need to have secure employment. What lenders like most is permanent employment. And so being somewhere where you're getting a salary. If you're getting overtime, they'll want to look at that over a longer period. If you're casually employed, they'll want to look at it over a longer period. So the nature of the employment is important. If you're self-employed, again, they'll want to look at it over a longer period, and we'll look at tax returns to prove income. And so it's income less your current commitments, if you have current loans, and that needs to prove that there's going to be a surplus income.
And they
once
want
you
to see a
get,
pattern, don't they? They want to see a certainty of pattern of regular,
That's right. And
regular payments
and
into
that's
your
why,
account.
Permanent position is very important. Casual, you really need to be in that job for about 12 months. So you need the income, then you need savings, and normally if you're a first-home buyer, you'd need a minimum of 5% genuine savings.
Okay.
The rest could be non-genuine, coming from sale of your car or a gift from parents.
So if you
or
can
something like that.
demonstrate your savings over, let's say, a
3 months.
a 3 months, or 3 months to
3 month
even
period.
6 month period, that you put away a certain amount of money and showed your ability to save, is going to work very favourably to you for you
and
at a bank.
Probably for a first-home buyer, they might drill down a little further too, so that if, let's say, for example, they're looking for capacity as well, so that if you are currently paying rent of $400 a week, and you're wanting to take out a loan that's going to cost you $700 a week, and you're only putting $50 a week in savings over the last 3 months, they're going to doubt that you've got the capacity to service it.
Yes.
So you really should have your rent plus what you're putting away, adding to what your new loan payment's going to be of $700 a week, and that'll show capacity as well.
Are there alternatives to saving for a deposit?
Yeah, the alternatives would be really mum and dad.
Yep.
So mum and dad can provide a gift in terms of a cash gift, and again, you still might need to meet the genuine savings requirements if the loan is less than greater than 85% or 90%, or the parents might put up a security guarantee. That's where they put up.
Are you seeing this more now?
Yeah, probably. I was thinking about this on the way up. Probably about 50% of first-home buyers will get some kind of assistance from their parents, either by way of I call it a gift/loan. So it's a gift from the lender's point of view, and it may be a loan, informal, that the kids have to pay back, or it comes out of the will or whatever.
Or if the parents have built up equity or have paid off their home,
they
can
might
use
draw on their loan and
right.
give it to the kids, or they provide their property as a security guarantee. But again, that option puts the parents, good for the kids, but it puts the parents at risk because they're putting their property up for the kids.
So talking from a business point of view, because we are on the business show, and I was thinking about this the other day, or I've been noticing this subject coming up a little bit amongst business owners, the importance of paying themselves a regular wage, even if it's only a small amount, because of that factor of when they are needing to have a loan or whatever, they can see that the business pays them something regularly. And a lot of people don't do this, do they? You probably come across this, do you, Rob?
I think it's good just from a cash flow management perspective to actually give yourself a salary to live on.
Absolutely.
Otherwise, you're all over the place. It isn't necessarily that important from a lending point of view, because what we would use to assess the income would be the business profit, plus we would add back then the salary you pay yourself, and it might be depreciation and things like that to get an income figure.
Okay, so it's not as important then. It's important to pay yourself, for sure, and we're often the last to pay ourselves when we're in business.
Yeah, and it's, I'd certainly recommend, I think it's a much better way to go, and then whatever profit you make is a bonus. The only thing where it might make a difference too is if you don't distribute the profit, the lenders are going to want to see that there's actually evidence of ongoing funds. If it's a company structure, for example,
yes.
They'll want to drill down into that. So it is, look, generally it is better for a whole lot of reasons to pay yourself a salary.
Right, okay.
The other thing I was going to say before on character.
That
third
you
thing,
were.
I didn't comment on that. But I was just going to say, because you need income, you need equity or cash, and you need to be of good character. And I just wanted to mention on that because it's often overlooked. What the banks will drill down into there is what's the conduct on your current loans?
Right.
So even if you've defaulted on a mobile phone bill, you're a young person and you've defaulted on that, and that's on your credit record, that would deem you to be of unsuitable character for a loan. Or the other thing too that's often overlooked is your everyday account. If you're constantly going into debit because the direct debits are attempting to take funds out and there isn't enough funds there, and if that's a pattern in your everyday account, that also is problematic.
And do they have software or programs that can because they don't pore over your accounts, surely?
Oh yes, they
Do
do.
they? They do. Wow.
They troll through your accounts.
Oh wow.
Look,
okay.
it depends on the lender. There's some lenders that will actually want to see at least 30 days history of your everyday account, so they can actually see what goes on there.
Wow.
And they're actually assessing conduct.
Right.
And not all lenders require that, but certainly that can be the problem sometimes when you go to your own bank, because they can access that without you even giving it to them.
Yes, yes. Wow.
So sometimes it's more advantageous to go to another bank, particularly if the conduct on your loan isn't particularly good.
It's really important to not be flippant about these things that we do in our daily lives, and I know a lot of people who get unstuck. Or defaulted and don't realise that.
Think it's okay, and one off, maybe twice, But if this is a first-home buyer and it's a high percentage lend, they're going to look at it a lot more closely, and if there's more than a couple of these defaults or whatever, it's going to be problematic.
And what about, because we are talking first home buyers, so what is the status with government grants now? Are they still in effect, or what's available?
Only on brand new properties. So
Okay.
you've got to buy a brand new property, that is, or it might be land and a construction loan to build the property. So you only qualify for that grant if it's a house that's never been lived in before. There's a stamp duty concession, so you don't pay stamp duty on the transfer, and the government will give a $10,000 grant. For a lot of people in the mountains, it's probably better as an established property because the build cost up here is very, very expensive because of the bow ratings and because the cost of materials is often a lot more expensive because we're building in bushfire zones.
Right. Okay.
But it's got to be new, and that's putting the price up. So most
It's
people
the
in the
downside
mountains-
of the
Yep.
beautiful place
that's
that
right.
we reside in,
Yep.
is that it needs to be,
Yep.
certain materials and
That's
within
right.
certain parameters.
So most of our first home buyers up here are buying established properties and not getting that benefit.
So at what point should people contact you?
Look, I think once you're starting to look at it, so I have lots of conversations with people who are just and I'm happy to do this, just to tell them what they need to do to get over the line. So I met with a guy on Friday, or I spoke with him, didn't meet with him, was over the phone, and he was falling short on income because he had a car loan, a personal loan. Even though mum was offering a security guarantee, he couldn't service it. So the goal for him is to pay those debts down, to actually take on a little bit more overtime. And so we talked about what he needed to do to actually get to the point where he could qualify. So, those sorts of conversations are very important, so you know what you're shooting for.
It's fantastic advice, and I love that you're willing to do that with people.
Very
I'm
happy to
sure
do
that there's, people out there who don't run their business the same way, that aren't willing to talk.
Look,
And I think it's great because you can see the potential
love it.
that in 6 months' time
I
that
get-
he might be your new client.
I get enormous satisfaction from
Yeah.
seeing people buy their first property. I really, really enjoy it.
I bet you
And when
do.
I've worked with them over a long period, particularly.
Oh, wonderful. Well, thank you, Rob. That's Rob Lees from Mortgage Choice in Blaxland in Penrith. Thank you so much for coming in.
My pleasure.
Enlightening as always. If you would like to find out more information or like to talk to Rob, you can reach them on 4739 9749 or drop in to Suite 3/13 Hope Street, Blaxland, or shop 1A 1 to 3 Castlereagh Street, Penrith.
That's right.
Fantastic. Thanks, Rob. It's
Thanks,
always good to see you.